Hi, let's talk about Regional Health Properties. It's a company through its subsidiaries operates as a self-managed real estate investment company that invests primarily in real estate proposed for long-term care and senior living. The full information should not consider investment advice. Based on simple Wall Street, it does have highly volatile share price and it does not have meaningful market cap, 24 million. But anyway, last share price, we see here that the prices are going even this trade day over 100%, so they doubled it. And they had some of the earnings updates, CFO change, and market performance. You can see here 1 year return 741%, huge returns, of course beating the industry, beating the market, and long-term price volatility considers low. And valuation side, it's currently unfortunately overvalued based on simple Wall Street. Fair valuation should be around $6. I think this is simple Wall Street calculate more based on fundamentals. Fortunately, TIRX has no price targets, and the market watch has already, like you can see here, average of $78. So here's the big difference between simple Wall Street and the market watch. I think the truth is always somewhere in the middle, but it's a highly volatile share price because those who like the honest opinion, honest research, as we can see on the Finviz, it's you can see like midterm it's going up. They do have a pretty high volume, so over 60 million I see here traded today and a few days ago. But if we would look for the long term, so here's the 1 year returns, so it's over 1,500%. But if we open up 5 years, so there's a red. So if you brought it 2016, you could be like 5 years on the minus 94, 95, I see 96, and only currently minus 21. If we open up like max, so there's a, there you can see this, so this is pretty much pretty straight state my opinion on the highly volatile share price. So if you brought, for example, this stock in 15th August 2014, you couldn't not sell it on a profit side. So you will be waiting. Your portfolio will be melting. I'm not dramatizing, so this could happen to any company. That's why I recommend to diversify your portfolio. So through time, through years, you could lose all your capital, or otherwise, like if you would fix it. So if you would solve it, so there's a 97% minus, and only currently it's like going up and 62%. So those who are buying like a few weeks ago, of course they are profiting from it 400% even. But those who went even 5 years ago, so this spike could be this spike, and it could go down, but it could go up, so never knows. That's why I recommend to diversify a portfolio, diversify by time, by industries. So first, I like to recommend to ensure that you have the companies from S&P 500, and it's better to, like, if your risk taking abilities are low, you could try ETFs or obligations or so on. So I think they have many of the ETFs which are low volatile. There's a low beta, and they are more likely to not be so volatile as the stocks. But anyway, let's continue researching future growth, healthcare industry that they're working in, 11% past performance, historical earning growth, 11%. The company is currently unprofitable, and on financial health side, oh, so here's not so big and good news. So debt to equity ratio is almost 500%, which is considered very high, and the cash that they have is only 4 million. So I would consider this as like a real serious situation. They lowered the depth, but it's still looking not so good. Yeah, balance sheet. So here's half of the liabilities. They are not paying dividends, and insider volumes, yeah, no volume there. General public holding 80%, individual insiders 10%, institutions 8%. Top shareholders, yeah, Vanguard has added. Last reporting holding date 31st of December. So let's look here, 31st of December, yeah. So if you would bought there, 500%. Congratulations. Do we have, yeah, BlackRock is also here, and there's individuals that have been yeah, selling the stock just a little bit, 0.01, 15th of March. Yep, so simple safe dividend shows that shares outstanding increased 10 years ago, but till 2015, but it's currently pretty much on the same size shares outstanding are as a few years ago. So on a total sales, we have that it's decreased by like 10 times decreased sales. Currently it's 16 million, and yeah, based on the 2019 it decreased. And investing.com summing the stock for long-term investors as a buy. And let's look at the comments. So do you think I should invest a small amount of into SNS for a short period of time, maybe 2 weeks, to pull out later, or will not work out? Give me a best guess. So if you are investing in these kind of stocks where you can clearly see that it's a highly volatile share price, and if you're entering, like when I was researching the stock, it was over 50% on a trading day. Currently is minus 5%. So my biggest advice would be, first, you got to buy the stocks that are from S&P 500. They are less likely to grow as fast as the company. For example, this imagine sensing system. So if, for example, open it, so there's pretty not so much possibilities that the big company from S&P 500 for example Apple with the 2 trillion of capitalization would be raising like twice of X3, so would be 4 trillion, 6 trillion. So in 5 years maybe, 10 years maybe, yeah. But those small cap companies, they are more likely to do this, like 300% growth, or for example here 500 over 1000% growth. But those are buying like I said at, for example, $60 per share, then in 1 year it would drop here to 30%. You're holding 1 year and you're down 30%. So you are becoming, as traders usually say, back holders. Okay, let's continue. Second year that you have been waiting, August. Yeah. So here, 53%. You're holding it more. So 2017 August, 80%. And those companies from S&P 500, they are not so likely to go down this way. Of course, there could be, but for example, let's open 6 month. Yeah, so 6 month. So there's almost every company is on the positive side. Google made 32%, Facebook 21%, Amazon almost 10%, Tesla 73%, Apple 17%, Visa almost 30%, so there's a MasterCard 30%, United Health. So my best advice, and you would make the best way to invest in those stocks. You could research and decide by yourself in which company you prefer to invest in. Do you want those companies which are like growth companies, or dividend companies? Because here's for example, dividend companies in 6 months, Verizon raised only 3%, AT&T 18%. That's better because they are paying at least, I think, 7% of dividends. So this is basically a very good deal. And yeah, so define your strategies, but the best strategy is to build a portfolio from the high quality stocks. I know it's a trend name, like high quality stocks, but which is more likely to be quality, Apple or like this? So you never know, of course, but still, by diversifying your portfolio, so picking at least 10 stocks with equal proportions, so 10%, for example, Microsoft 10%, Google 10%, or if you don't want growth companies, you want dividend companies, so you're picking Verizon 10%. You can also mismatch and do like second telecom and buy Verizon and AT&T, then 10% of Apple, if in equal proportions. Then you're diversifying by time. So then you're buying if the Apple would grow faster than the Microsoft, you're not buying Apple, so you're buying Microsoft to diversify. So if, for example, after a half year, Verizon made 2%, Apple 17%, and yeah, you see here for example, Apple is 17% up and Verizon 2%. So you're buying more of these Verizon stocks, and Yeah, till the April is again 10% of your portfolio. So you're kind of raising the stock that are dropped from the equal proportions. So slacks, this is my best guess what should every investor do, and investing a long term. Like, find your strategy, find your stocks, but more likely these companies are mostly on a positive side, and you could profit of this. But if you're able to take and manage more risk, then you could go for the mid cap companies, and yeah, of course, low cap companies. For example, this one, which is like 24.5 million of the market cap. But anyway, thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.